I wish it was like Ferris Bueller singing Twist and Shout. I got a couple reasons that I'll
Bueller, can you chart the triple Qs? Yeah, we can. You want daily? You want bigger or smaller time frame? Or both. So let's do the bigger time frames first, Marlon, and then we'll go to the smaller time frames. So when I do bigger time frames, for daily time frame swing trading, I like to go to the monthly time frame, and this is where I love to get my levels for bigger time frame trading again. So remember, monthly and weekly, I like to use these to help me on the daily. The daily time frame, I like to use that to help me on the smaller time frames. Now, whether that's me using the 5, the 3, the 1, the 2, the 20, the 10, the 30, whatever time frame you like on the smaller time frame, I'm going to be using daily time frames for that. So we're going to start with the bigger time frame. So monthly, these are called emerging candles. You see this candle? This is the first time the triple Qs have ever been this price, ever in their history of their life. They've never been here once ever. Right? And this is the closing price of this candle. This is what I see as kind of a break spot in price, a very important part in price. This is what I call an emerging candle, E-M-E-R-G-I-N-G, emerging candle. Every time I see that, I mark the close, and I always start from the far left of my screen, like a book leading left to right. Therefore, it's like a, in order. I do not mark red candles that have an open, right? So let's say this candle right here was right here. Let's say it opened right here. I'm not going to mark this level because this red candle is over it. So essentially, this candle would be worthless if it was a lower open. But instead, it's not. It's a little over it. So we're going to mark that. Whoops. And a really awesome setting to have on, by the way, is click that cogwheel. Go to Snap Drawings 2, OHLC, Apply, OK. Make sure you have OHLC on. This will make it to where you can click the drawings a lot quicker. This is what helps me click on the opens, the closes, the highs, the lows very quickly and very accurately without having me do all this tedious checking to make sure I got the level right. But let's keep going. And why I started here, by the way, is because I see price is about right here. So I want to start under it and I want to finish over. Therefore, I get as many levels as I can in between, and we can cover a range of levels, and then I can be set. So let's keep getting some more emerging candles. So we got one more, whoops, one more. Another one, and the last one right there. Emerging candles all the way up from 294.88 all the way up to 393.80. So we got every level we needed. Another level that we like to add, and I'm not going to add it on this chart. I'm just going to show you because this is a very clean example. I mainly do this for when I do my smaller time frame trading or anytime I see a large area, because it's not really fair to say, oh, look, guys, over 313.75, let's target 338. That's an impossible trade. We're not making that. So what I like to do is I get a fib from one emerging candle to the next. So to fill that void, and while maintaining a consistent rule, again, I wouldn't want to make up a rule that moves this level anytime. I should be able to delete all of this, come back and add the exact same levels. 325.87. Which you don't have to do this part. I like to be tedious with it though. And I add that halfway point. All I did was add a halfway point between two candles, and that's what gives us levels in between certain areas. And you can do this as many times as you need to. If you ever see an area that needs to be marked in between, be my guest. It's always very helpful. I'm gonna do one more right here. Right after I said I wasn't gonna do it. And then this is for the daily time frame. So for a daily time frame trader, whoops. You're going to enjoy this a lot. So maybe not right now because we're just pushing through highs, but down here while we're consolidating, you're looking for patterns to hold. What ended up holding down here? We had a lot of consolidation. We end up getting a bullish kicker, and this is where I use my patterns with positioning to give me my trades. So you swing traders out there who are wanting to learn, make sure you check out a lot of my swing trading playlist in the Moustache Bot channel I mentioned earlier, where you can get a lot of extra information, again, using patterns to help you find extra plays, getting it on golden pockets, getting it on retest, playing open range breakouts. Again, using patterns with positioning to help you find the best trades while using these monthly levels, these halfway points. And Marlon, just to give you kind of extra insight, if you wanted to, because I saw you mention the weekly, you could use that monthly to help you on the weekly, or you could use weekly levels to help you on the weekly. Another cool tip is using those weekly emerging candles. If you really want to, you don't like that there's not enough levels here or something for you, it's just not your fit, go test out that weekly. Maybe those will give you enough levels. That'll give you more levels, but you'll notice a lot of your levels will end up being marked the exact same for a lot of your important levels. So it's good to do one or the other, not both. But let's go to the daily time frame now. I'm going to clear this. No problem, Marlon. Any time for you guys. You guys always come in here with a good attitude, and always, it's just what I'm willing to do. It's those people that come in here with a negative attitude that I'm not willing to talk to. Oh my god, I just read Joel's messages. I thank God for bringing you to Earth. Thank you, Jason. I love you too. I actually did go back to the entry part of the live and screen recorded. Okay, Christopher, perfect. I'll have a video for you though, just in case your recording's messed up or something. I got you. Yeah. What else? What else? Thank you, brother. I have to go back to work. I was on break, but I'm gonna stay in the live. Just gonna go back over it. Okay, perfect. I'm about to do the daily time frame. I'm gonna clear it. So this is, what I'm about to do next, guys, is the exact same thing. I'm going to do the exact same thing, except on the daily time frame. And the difference between that is that those levels are for trading on the bigger time frames, for swing trading, for catching bigger TA. This is going to be used for my smaller time frames, for possibly catching smaller time frame TA, for catching quicker trades, scalp trades, the levels you guys see me post every day, the levels you see me stream every time I stream. These are the levels that you're seeing, which you don't really see it on this chart a whole lot, but Q's was the one that was requested, so we're going to do that one. So I see this little hump here. I see the all-time high here. I see price in between that. I'm going to start somewhere in between there. I'll just start here. All emerging candles so far. Nothing fancy. And then right here, we hit our first fancy level. So you could add this because it's the exact same level. But I'm not going to because it's not an emerging candle. I didn't push the new high. This was already broken. See, like right here, how this candle's over this candle? You wouldn't mark that candle. That would be wrong. Because this candle's over it. You wouldn't mark this candle, though, because it's not an emerging candle. So what do? Move on to the next one. Right there. And then what do you do with all that space? You add a halfway point. And let's say you're being super tedious. For some reason, you want to make sure you have every level on your screen. You still think between 360 and 364, again, an emerging candle to a halfway point, you still believe that that is too close. You have two options. You can add another one from this one to here and add that, and then you have a kind of double halfway point, which I don't really call it that, or I don't really call it anything. I just call it another halfway point. Or you can just add a psychological level, which you can see between 360 and 364. What does your brain go to instantly? 362. That's a great thing you can do. So if you want to go ahead and do that, you can. It's definitely not going to hurt your levels. It's going to, if anything, help you. Let's keep moving on. Emerging candle, emerging candle, emerging candle, emerging candle, emerging candle. All right, we're pretty far above price. Let's try to get one more, and then we'll finish it up. Let's get this emerging candle to this emerging candle. The space is too wide between those. If we were on the smaller time frames and we were trying to take a trade from 369.67 to 373.23, and you told that to somebody, they would think you're crazy. So you need to add that halfway point. Again, up here. And again, like I said, if you want to go ahead and add another halfway point or a psychological level in between, be my guest. You can definitely do so. And what this helps us is on the smaller time frames, now we have effective levels from the far left that we don't really ever have to worry about again. Now this is where your intraday levels come in. Are we all up to speed still? Everyone's still with me. That's also giving me a chance to drink water. Alright, everyone's still with me. Alright, so you have all the bigger time frame levels. Basically what you're using is price history. It's nothing fancy, but it's probably some of the most effective information you'll ever have plotted on your screen. Now, what are some other things? Who's been a long time member in here? Who can tell me what are some intraday levels that I'm going to add here soon to show everybody? I'm going to add a list of levels here. So let's go over them in a list real quick, and then I'll show you them on the screen. So let's go over the level of importance. So level 1, the pre-market high, the pre-market low, previous day high, previous day low. These are 4 levels that are going to be definitely helpful, that are not as important as these next sets, but they're still very, very important, and you should definitely have them marked or keep note of them. The next set, these are your pivot points. Previous day close, previous day open, and current day open. It's going to be very, very important, and you need to know these abbreviations. They're very helpful, so you don't have to keep typing out pre-market high, pre-market low. You'll remember them over time. So there's your most important levels. And then, of course, we have our supply / demand of previous day high / previous day low, and we'll go over that. And honestly, I probably shouldn't even type it like that. I'm just going to say supply demand so you don't get confused. So let's go over that. Whoops. Activate. Throw there. price level tool. All right, so let's go to it. So here's our previous day high. Here's our previous day low. Here's our previous day open. Here's our previous day close. Zoom on over to today. Here's our previous day open, or current day open, sorry. Current day, or pre-market high. I'm really fumbling all over the place with English. And then look at the bottom of my screen. 23.45, 23.50, 23.55, and then you have 0. 0 is your pre-market starting. Bottom of that is your pre-market low. So there we go. This is the maximum number of levels you should have on your screen at all times. Now, some days it's going to look great. It's going to almost look too good to be true type deal. Like, it's going to look really, really, really good. There's going to be room between yourself. Kind of like today. It looks really good. But something we've been adding here recently. Now, this is, again, the max levels you should add. Something we've been doing here recently, and this is really for the sake of sanity. Let me remove all those smaller time frame levels again. So now you understand all the levels you should have, from bigger time frame to smaller time frame. That is like the max levels you should ever have on your screen, is all of those. We all understand that, right? Now here's the number 3 of this, supply and demand. Now you understand all those levels, where they come from. Let's go over supply and demand. So I'm going to use my rectangle tool here, and I'm going to just focus on yesterday. This is where I get those fancy squares everywhere. So first 2 spots that my eyes go to, the top and the bottom, because that's what I'm focused on, the high and the low, right? So let's focus on the demand, the low of the day. So we have the low of day up to the today's open, and this is essentially going to be your main area. But again, supply and demand are based off of my non-moving variable rules. Again, these are consistent rules. Anytime you draw a supply, you're going to be drawing from the high of the move to the open of the last green candle, right? Demand, and give me a second, I'll unleash it so you can see it all, is the low of the move before reversal to the top of the last red candle. But you'll see in some cases we changed this up, but it's always consistent. You'll understand it once I show you again. So this is the rules behind it. So essentially this rule is telling me before this reversal up, I'm going from the low of day to the top of the last red candle. I'm going to do that. I'm going to edit the properties. I'm going to add a couple days. I'm going to click OK. It's going to be highlighted. It's going to be on the far right of my screen. It's ready to go. Let's add my supply. This is again my demand. Sorry if I said supply right there. Demand. Demand is the high of day. Before the reversal back down, you can see we had a high, a lower high, and they kind of came back down and closed a little bit lower. Nothing crazy, but it is still an area of supply. So we're going to add the high to the open of that green candle, edit properties, add a couple days, okay. And that's, again, creating an area of supply and of demand. Scroll on over. This is what you see, and this is why you see this on my SPY chart. You guys keep seeing me draw this on my SPY chart. I have one here. We'll go over why there's one here, not at the bottom of the day. So we have all that. Let me do this. So we all understand that. We get the supply, or we get the demand, we get the supply. We understand why we do the high and low of day. And this really kind of gives you an early part of your range. Because essentially, if you can break above this and hold on top of it, you're bullish. If you break under it and you hold under it, you're bearish, at least from this direction, right? And then you can use these levels outside of it, in this direction for targets. You can use the top of this as a stop loss. So it's always great. And this is how you should use levels no matter what moving forward, right? Now, why on SPY did I have one in between not at the low of day? Because there's another area of demand here. Does anybody else see it? Yes, Chris. It's the first time price has ever been there. You can also use recent moves. It doesn't always have to be the first time. I was just showing you the original rule. There's going to be charts that you see that don't have that. You can use recent rallies, emerging candles, to also help you out on those charts. Like Coinbase, you'll see, doesn't have emerging candles because they've never, they haven't stopped dropping. So they don't have that move. So you want to use recent reactions for that. But let's see here. Who can see it, though? We have the area of supply right here. Price came up, rejected, and started to range trade. Where was that? That was from the high of the move to the open of that candle. So that creates an area of supply, right? Let's add a couple days to that. What happened after that? They pushed over it, held it as control, and now it's demand. So now we know there's buyers here, right? Same thing happened here. You can see there's an area here where they did it before reversal. So there's technically an area of demand here as well. So now you have a lot more information going into today. Now you know, oh wow, okay. I have supply. If I break under this, sellers are in control. There's demand here from the previous day. There's demand here. Both of these areas essentially need to be broken and retested from underneath for them to completely move lower towards 364, 365. So now you have some good ranges to give yourself.